I work at M&P. I've been involved with the CEC now for about 5 years. I'm not actually presenting today. Dan and Mark are presenting on financial planning and tax. But I thought I would give a quick introduction and give you guys a little bit more information about M&P. So there are some stats from probably about 2016. We started in 1945 in Brandon, small one-office firm, and have grown to become the 5th largest firm in Canada. One of the reasons I think that's important to note is because we take pride in being entrepreneurs. And our firm tries to grow every year, and we've succeeded in becoming the fastest growing accounting firm in Canada. So I think that's why we're such a good fit for the CEC and why we enjoy being a part of this so much. One of the reasons that we are entrepreneurial in nature is that we expand our service lines, and we don't just focus on typical accounting, balance sheets, although you will learn about that tonight. But we do assurance, taxation, valuation, forensics, across all different industries. So this kind of shows why we want to partner with the CEC and why we think it's so important. Before I pass it on to Dan, the one thing I do want to mention is that the winners, or the top 3 finalists in each stream, the M&P sponsorship is for 4 hours of our time. So even if you don't finish first, but you finish in the top 3, each of those 6 groups get 4 hours of our time for free. That's our sponsorship. So just so you know, and if you get to that position, take advantage of it, because not enough companies do, and we're happy to sit down with you for 4 hours, go over business questions, whatever they may be. So just a reminder to take advantage of the sponsorship as we have it. And without further ado, here's Dan.
See if I can get this mic to work. Okay. So I wanted to talk a little bit about maybe even a rhetorical question to start. Why do you want to start your own business? What makes you tick? What makes you kind of move in that direction? Before I get to this slide, I wanted you just to think about that for a moment, that each of us have different initiatives, different experience, different ideas. We want to fill a need. We have different items that excite us about what we want to do. Each of us have a different role that we're trying to fulfill. Most businesses find, as it was mentioned before, there's opportunities where they're going to fail. There's issues that create roadblocks to you succeeding in the chosen field that you're trying to do, the chosen idea that you're trying to develop, what you're trying to get off the ground. So I have listed here some of the main issues that hinder your growth, hinder your opportunity. So many business owners kind of getting started, there's a lot of stress and anxiety that's built in this. It can hinder you in your development because you're worried about all the small stuff, all the things that you're not necessarily having to affect your business, but all the dynamics of, do I do this right? Do I have to file this? Is there issues with my finances? Do I have the finances to do things? Do I have a lease before I actually have a business name? Looking at, do I have the appropriate knowledge to actually run a business? Do I actually know what to do, what steps to take forward? Is my financial understanding? Do I know what the financial information is telling me? Do I know how to interpret it? Is my expectations of this financial information exceeding where I'm actually at? Am I realistic in my expectations? Am I budgeting myself in such a way that I understand truly where I see it fit to see myself now, in the future, 5 years from now, where I want to see my business grow? Everyone keeps telling you that you got to learn from your mistakes, you got to try it, you got to move forward, but the biggest thing is it can be expensive. Making the wrong mistake, it can really hurt you, but you got to learn from it. You got to look from other people's examples, talk to the right people, put yourself in situations so you're not only learning and developing, but that you're not making those critical mistakes that could have been avoided. And then lastly, not letting your business manage you. Being on top of everything that's going on, but understanding what you need to do in place so that you're not letting the business overtake you, take you places where you don't want to go, and then before long you're falling apart. You're kind of going in the direction that you didn't really want to head. So I kind of wanted to start, before I kind of get into more of the financial literacy aspect of it and kind of just go on the basics of a balance sheet, as Reese mentioned. Just some of the ways that we can kind of mitigate some of these issues as you move forward. So first and foremost, you're working on a business plan. This is key. This is your roadmap to your success as an individual and as a business and as you develop. Without a business plan, you don't have a blueprint. You don't have an idea of where you want to be. You don't see the end goal. You have no idea what's going to take you there. The biggest aspect of this is that your business plan should address how you're marketing to people, how you're getting out there, who are your competitors, how are you going to set yourself in the market that differentiates you from everyone else. Your business plans further take you for your operations, giving you a guideline of what regulations are in place. Do you understand what drives your business? What hinders that? What roadblocks are you up against and your operations? Is there any regulatory filing laws or anything that happens with the city? Understanding and developing that. Your finances. Who's going to finance you? Where are you getting your money from? Are you just expecting that tomorrow you're just going to have the money pouring in because of your great idea? I mean, we have to be a little bit more realistic with that. Lastly, the people we work with. Most of us, there's you, right? You're starting your business. You're the first one to develop it. You're first taking the product out there. You're trying to develop the idea, but how do you get the right people working with you so that you get to the place that you need to be? Do you have that right hired staff? Do you have those people that you can trust to run that particular aspect or do the service that you're trying to provide or whatever the product is, and that you don't have to worry about that? It's getting the right people in the right place at the right time. Now, you've probably gone a lot more in depth in the aspect of a business plan, but just keep in mind that that's the first key aspect of it, is this gives you your guideline, your blueprint. You're not going to build a house by just, I saw that one, it looked nice, this is how I'm going to go forward with it. Obviously, you have a plan set out in front of you. It starts with one spot, one thing at a time, and you build upon it. Another key aspect is surround yourself with professional advisors. Reese introduced us as M&P, with an accounting firm. We have a bunch of different services. The key aspect too is not only is it an accounting firm help with your finances and key aspects with the business, but legal advice, individuals that have been there, done that, those individuals are your mentors. Those are the people that are going to take you to the right place. You need to find the right person that's willing to listen and understand where you are now and where you hope to go. They want to be right beside you and help you build that. You don't want somebody that where you walk in, you sit down, you talk to them, and they don't want to hear what you have to say. You want somebody that's going to take you to that next level and push you and challenge you in your ambitions and your expectations so that you're headed in the right direction. They not only will help you critically assess your plan, but they identify risks and help you develop the solutions much before you actually hit that point in the road where you're going to hit that risk or hit that roadblock that's going to slow you down. They basically become the devil's advocate, if that's the easiest way to put it. They help you get there so you understand it, because we can get in this world of lull and not understanding that truly, I think this is going to work, this is how I'm going to do it, but they pull you back down to realization and say, look, we can get there, but this is how we're going to do it. Lastly, to help mitigate some of those issues is understanding your record keeping. This is some of the biggest issues that we find even in the accounting world when people bring in their records. More often than not, I've seen it, you get a shoebox full of receipts and they say, figure it out for me. One, that's gonna cause a real big roadblock for you, because you're not gonna understand where you're at with your business, how you're developing, where do I have money coming in? Do I have money to pay the bills? Do I have everything that's in place so I can move forward? So not only is it record keeping important for your tax compliance filings, for personal or for your corporation or whatever the case is, but it enables you to monitor your business, monitor your successes, and then also to monitor where I'm at. Can I reinvest money into my business? Can I help it grow? Lastly, keeping your records in an accessible place so that you can refer back to them. There's going to be times where there's bigger purchases that you need to pull a receipt for. People ask for things, know where they are. You have to hold on to these records, so if you get in that development now in the early stages, especially as you move forward and keeping those records, it's going to help you build as you move forward in that direction that you want to go. Biggest thing to remember is that not any two businesses are identical. They have similar processes, they have similar ideas, but everyone is unique in their own aspects. And you have to remember that there's not a one trick pony. It's not going to just go in the one direction that everyone has. All your individual strengths are going to be different. Each of you will have certain strengths that define you, and that's what you're building upon. Rely on those, but you have to seek other individuals to help you build those key components. Once again, having a roadmap or having your business plan is a crucial and critical part of your business. That's what's going to help you take you to that next step, so you have basically a goal and a plan in place so that you can move it forward. Without that, you have no idea what you're doing. And then lastly, having the right people to assist are crucial and essential. If you don't have the right people in place, you're not going to know. You can't just pick up the phone and say, hey, I have a question. What do I do at this point? Those are the people that you trust, that you can ask them any question under the sun, whether it's a financial related question, right up to a legal advice, or just to say, hey, I'm not sure what kind of insurance I should get. That's the type of questions and people you need to have to, because you know what you know best, they know what they know best. And so why don't you let the individuals that have the technical training where you may be a little bit more weak to help educate you, but not only that, answer those questions so you don't waste time where you could be putting yourself in a situation where you can develop and make more money doing what you do. So that being said, if we get all these things in place, what do? We have things set up, things in place. We have this financial record keeping all put together. What does it mean? How does that affect me? How does it develop what I need to do? I want to just kind of go briefly over a balance sheet and some of the key components of this. So a balance sheet consists of your assets, your liabilities, which essentially if you take your assets less your liabilities, you get your net worth, or what is your equity. Banks look at this for financing options of how much can they loan you based on how much assets you have to secure against. Basically, your assets are anything an individual owns. Example is your house, your savings, cash that you have in the bank account, any investments that you have, your vehicle. Those are aspects that they look at, less your liabilities. So anything that's borrowed against those assets when you purchase it. For example, you buy a car, that's your asset, but then you have a monthly payment that you're paying off that loan, that's your liability. So obviously, you buy something at $30,000, you have a $20,000 loan, obviously your equity in that is $10,000. It's pretty simple math, but it's getting more complicated. So breaking it down just a little bit more, you have your current assets and you have your current liabilities. Simply, it's items that are within 1 year. So basically, can you turn investments or your inventory or whatever the case is, can you turn them over within 1 year of now? So if your year ends, like you start January, can you turn that cash over and create to pay off any kind of obligations that you have going forward? Same thing with current liabilities. It's your credit cards, it's your credit lines, anything that's kind of maturing within this 1 year time frame. Your long-term assets, your long-term liabilities are items that are going to exceed that 1 year mark. And that's where those mortgages on your house, it's a 25-year mortgage. That's going to be a long-term asset because it's not matured in 1 year. I guess it's pretty easy to go that way. That being said, your balance sheet, they call it your net worth statement or whatever else for an individual. When you walk into the bank, when you walk into any financial institution asking for money, they want to know, largely a lot of the time, they're asking how much assets do you have so we can secure against. What security do you have so that if I lend you money, I'm going to make sure that if you default or if something fails or if you're not able to make those payments, that I can obviously get my money out. And that's basically what you're looking at. That's what you want to know. And that's where the balance sheet or your net worth statement comes into play. Getting more towards the aspects of your daily business activities is your income statement. Income is your money coming in. Basically anything from any stream of revenue that you're doing from your business operations. This is pretty self-explanatory for that aspect. And then obviously your expenses, anything that's leaving the account, that's towards your business, which equals your net income, whether you have a net loss or a net profit on what you did for those years worth of activities. Cash flow. Sometimes they talk about a cash flow statement. Basically, you take your net income of what your business made or whatever you're doing. You adjust for any non-cash items that are in there. Typically, if you're, I won't go into that too much detail. But your changes in your working capital, so anything that's you haven't been paid for yet, or things that you have paid, you have the obligation to pay, adjusting for those. Your changes in debt, where you have loans issued to you or you're making repayments, because obviously those won't flow through to your income statement. And then your investment activities, things that you're investing in, such as your vehicles or your assets to build your whatever you're building, et cetera, et cetera. Basically, at the bottom line, it's going to come down to, it's going to show you where does your cash go? What is your cash doing for you? Do you have surplus cash? Do you have cash that's sitting in the bank account? What are you doing with that money? What are you doing to develop yourself? Okay, so that basic understanding, we'll take it now towards kind of the financial ratios that a lot of the banks and businesses that look at. I don't want to go into too much depth because every situation is going to be a little bit different, but we'll get the basic analysis of this. Sorry. Okay, so your current ratio is just basically, as we talked about with the balance sheet, is your current assets divided by your current liabilities. At the end of the day, the more current assets you have, it's going to have a stronger current ratio, which essentially means you have the cash or the availability to pay those obligations in a more readily available time. Basically, what it comes down to is most individuals look at a minimum of $1.25 to every $1 of liability that you have. Banks prefer if you're up to about $2 and higher. It just puts a better, it shows them that you have a better result of paying the obligations that you have presented before you. Your debt to equity ratio. This ratio is an indication of how much your assets are funded by debt versus your personal net worth. So basically, how much are you investing into the business versus how much are you loaned from the bank or loaning from other financial institutions or whatever the case is. Basically, it comes down to, for most businesses, banks will often require the debt to equity ratio to be less than 3 to 1.
So for new companies, a lower debt to equity ratio would be expected. As a brand new company, you haven't built the equity yet up in your company. So a lot of your new purchases would be financed through debt. So don't let that number to 3 to 1 scare you as you guys are just starting out. But the goal would be over time that you're building equity within your company and you would improve your debt to equity ratio.
Perfect. Thanks, Reese. Debt serviceability ratio basically looks at your earnings before interest, tax, depreciation, and amortization over your total debt payments due in 1 year. Basically looking at, can you repay that debt in a suitable amount of time based on your earnings that you're making for the year? Can you service that debt that you have? There again, don't let the numbers scare you because obviously they understand your first little bit here, you're just getting started, you're developing this and they expect that. But the idea is that's a financial goal, that's part of your business plan, is to head in that direction so that you're actually servicing them at an appropriate rate and that you can sustain it over a longer period of time. I wanted just to touch on just a couple aspects with budgeting. Basically, with your budgets, the easiest place to start is what's your outflow in cash? Where do you see your money going out that's fixed, that you don't have really a choice, you have to pay that bill? Examples being your rent or your mortgage, you have to put a roof over your head. So what's the cash going out? Your vehicle payments, your utilities, your property tax. You can't really change those. Those are just part of a business operation. Those are your fixed costs. At the end of the day, if you know what's going out of your bank, you know what at least a minimum you have to make that in order to meet your obligations. And anything beyond that is your discretionary cash. It's your cash that you can use to reinvest in your business. It's your cash that you can use for purchasing additional items, growing the business, anything in that dynamic. But you've got to know where you are and where you're taking yourself to. Overall, doing a budget will help you put you in a position that you can be better set up to put yourself to make the purchases in a smart and effective manner. Banks will often lend based on your budgets, knowing how much income you have coming in so that you're in a place that they understand how much cash can they really have coming out. And especially when you're starting, they're going to look at your budgets. They're going to look at basically your pro forma, looking at how far out, where do you see yourself, how do you expect to pay us back, essentially is what they're looking at. The question you have to ask yourself on all this is, can I really afford it? Can I do it this way, this fast, right now, at this point in the development stage, as I grow or increase in size in the business? That's what you have to look at. If you have the cash to do it, by all means, that shouldn't be your hindrance. Lastly, know your limit and stay within it. I mean, the biggest thing behind everything is knowing where you're at, knowing that you want to get to that next level. Yes, it takes some investment. Yes, it takes a desire to get there, but knowing that you have limitations. Your knowledge, your education, your expertise, there's limits to all the aspects of you as you kind of move forward. Surround yourself with individuals that know their expertise in their particular area. Let them help you. Let us help you. Let yourself understand that you can't do it alone. And that's why many of you are here today, hearing about different presentations and different things to help you grow your business, put yourselves in that situation. That's basically what it comes down to, is putting yourself in a spot that you know where you're at, where do I need help? How do I get to that next level? And that's what it's really going to come down to. So I'm going to pass it over to Mark, and Mark's going to talk a little bit more on the tax side of things.
As Dan mentioned, my name is Mark Carrig. I'm a tax manager at MNP, a member of our tax team there. So I'm here to talk to you about tax considerations for small businesses. So here's a brief outline of what I'm about to talk about. We'll start with the sole proprietorship versus incorporation, the advantages and disadvantages of incorporating, the tax deferrals related to corporations, and wages, the remuneration be paid from a corporation via wages or dividends. We'll go through a couple after-tax income examples, and then we'll follow that up with deductibility of expenses, some payroll, and GST. A question we often get with new business owners is, should I incorporate my business? There are many items you should consider before incorporating, and one of the most important things, I guess, is the tax implications involved. There are several advantages to incorporating, one of them being the flexibility to split income with family members. And this, not quite as easy as it used to be, as the federal government tabled some new rules last year that are now effective January 1st of 2018. These new rules will limit the ability for family members to split income through a corporation. Another advantage to a corporation is you have potential access to the capital gains exemption. If you own shares in your corporation and the shares qualify and you sell those shares at a later date and they've appreciated in value, there's potential that you will have a capital gain on the disposition of those shares, and some of it or all of it could be sheltered with capital gains exemption. I mentioned earlier there's different remuneration options out of a corporation, so you can pay wages, you can pay dividends. I'll cover more of that later, but there's flexibility through a corporation for those options. Another advantage is the creditor protection. You will potentially be able to protect your personally held assets if you have a corporation, assuming the bank doesn't take a personal guarantee on those assets. And the corporation will potentially provide protection for creditors if you have a couple down years, can't make some payments. They will hopefully not be able to come after your personal assets if set up correctly. And then in the all caps with exclamation marks, the big advantage is the ability to defer tax to your corporation. I'll get into more detail on that later again. And there are definite disadvantages to a corporation as well. One of them being the cost to incorporate. You're a new business, you don't want to take on any more costs than you need to, and there'll be some legal fees involved off the start, potentially, and as well as annual filings for a corporation. Having a corporation can be somewhat complex. You're not only worried about your own personal taxes now, you're now worried about another entity. It's another tax return you have to file. And then the next point there's potential for detailed financial reporting. So as Daniel has pointed out, or had pointed out, you may have to have a third party such as MNP prepare financial statements for you if you're being loaned a large sum of money and they want a third party to report the numbers for them to determine the ratios and all that other information. And another big disadvantage to a corporation would be that many small businesses, while they're trying to get their feet under them and establish themselves, they will suffer losses their first couple of years. If you're not incorporated, these losses can be included on your personal tax return and offset under types of income that you may have, so it could actually provide you with a tax refund or reduce your current tax liability. If you're incorporated, these startup losses are actually trapped in your corporation and can't be used until your corporation becomes taxable, and that'll offset some of the income there. So I mentioned the tax deferrals earlier. Corporation, in most cases, won't provide absolute tax savings for you. One of the big benefits of having the corporation would be using it more as a tax deferral mechanism. The reason I say that is small business corporations will be taxed at 12% in Alberta now. They changed the rate for 2018. So it's a fairly low rate compared to your personal tax rate as your income increases. So when your funds you'll be taxed initially at 12% in your corporation on any taxable income, and then remuneration as dividends from your corporation will then be taxed in your personal hands as well. So if all the funds are withdrawn from your corporation, there is really no tax advantage. The deferral will come if you are able to keep some of the funds in your corporation and reinvest that into your business. If you earn $100,000 and you're pulling it all out, you're not utilizing the deferral that a corporation can provide for you. So the tax deferral advantage, the personal tax rates in Alberta can be as high as 48%. They start at 0 up to, I think, almost $12,000, and then they'll gradually increase. You'll have your marginal rates. As your income gets higher, the tax rates on that additional dollar of income will also increase, all the way up to 48% on income above $307,000. The corporate tax rate, as I mentioned, is 12%. On the first $500,000 of income for a small business corporation. So any income that is not required for you to pull out of your corporation for personal living expenses or buying anything, I guess, anything that can be left inside the corporation is taxed at 12% initially and not at those higher marginal tax rates. So you can effectively defer the tax on that income and potentially reinvest it into your business and help increase the growth of your business. So I mentioned earlier the wages or dividends coming out of your corporation. The amounts withdrawn from the company in the form of wages will be fully deductible to your company, assuming they're reasonable and they're not. You're not paying family members for not doing anything. Those won't be deductible, so you'll want to avoid that. However, if you're paying yourself as an owner of the business and it's a reasonable amount, that amount will not be taxed in the corporation, and it will just be taxed to you personally as a wage. Some of the benefits another benefit to the wages other than being deductible to the corporation is that wage will generate RRSP contribution room for you. So the wage to you will increase your RRSP contribution room. If you invest in your RRSPs, then you will receive a personal tax break there, or you'll reduce your taxable income for your personal tax return. Some of the downfalls is any income you pull out of your corporation as a wage will be subject to the full rate of personal tax at the higher amount, and that amount is also subject to CPP and income tax withholdings. Also may be subject to EI. Dividends. Benefit to dividend is downfall for the dividend, I guess, is it's not deductible to the corporation. So you will pay tax on that amount in the corporation, and then as the dividend flows out to you, you will also pay personal tax on that. I'll go through that in more detail. It's not as bad as it sounds. It's not a double tax. There are some credits. You're eligible for a dividend tax credit on that amount, and it'll sort of even out. I'll get more into that detail later. Depending on your take, I guess the dividend is not subject to CPP and income tax withholdings. So if you're someone who wants to contribute to CPP, then maybe not for you. If you're someone who would prefer to invest your own money into some sort of pension plan, then might be right up your alley. The income tax withholdings, some people would prefer to pay it earlier or have it withheld, and some people would rather have the surprise when they're filing their income tax return. Another downfall, I guess, with the dividend is it's not earned income, so like the wages. So We will not generate our RSP contribution room, so something else to keep in mind. As it says, the last point there, everyone's situation is unique, so what works for someone might not work for another person. So if you have an accountant, talk to them on an annual basis, and I'll help determine what plan meets your needs. So we'll go into an example here. The first one we'll go through, the corporation earns $100,000 in taxable income in 2018. The shareholder requires all of those funds for all of the after-tax funds for living expenses, so we're going to pull all 100,000 out personally. The shareholder has no other source of personal income, so it's going to be whatever they get from the company would be their income. And do we want to take these as wages or dividends? So option number one, we're going to pay a $100,000 wage to the shareholder. So the total income to the corporation is $100,000. As I mentioned, the corporate taxes payable will be zero. We're flowing all that money out as a wage from the corporation. So we have income of $100,000, we have a wage expense of $100,000, the net income is zero. So no corporate taxes payable. We're going to pay personal tax on that $100,000, which will roughly be about $24,648. And give or take. And then there will be CPP on that. So there's the employee portion. I believe it's $55,700 or something like that. You're going to pay 4.95% on somewhere between $55,000 and $56,000, less the $35,000 deduction to that personally. So that'll be withheld on your T4 that you'll get from the company, and the company will also match that amount. So the total amount, since the $100,000 is greater than the $50,000 or $57,000 threshold, the total amount to CPP will be $5,188, and your after-tax cash will be $70,164 taking a wage. Option number two, you're going to pay yourself a $100,000 dividend to the shareholder. So the total income again in the corporation is $100,000. You will be taxed at the corporate level on this at the 12%, so you now have $12,000 of tax owing from your corporation. So you're left with $88,000 to flow out as a dividend to the shareholder. The personal taxes payable on the $88,000 is much less than the wage amount due to $88,000 versus $100,000. However, you also have a dividend tax credit that now works for you as well. There's also no CPP on the dividend, so your after-tax cash will actually be $74,600, and you're going to get a savings of roughly $4,400, $500. So in this case, it's not all cases, but in this case, a dividend works to your advantage. However, in the other example, or with the wage example, you were contributing to CPP if that's important to you. That's not a bad option either. So some more information here regarding corporate and personal tax. Your personal tax return must be filed on or before April 30th, 2018 if you're not self-employed, so if you're just receiving employment income. So it'll be due April 30th, 2018 for the 2017 tax year. Given that most of you here are probably self-employed. June 15th, 2018 will be your filing deadline. However, your balances of taxes owing need to be determined and paid by April 30th, 2018 to avoid interest on those amounts. Your corporate tax returns, if you do incorporate or if you are incorporated already, you must file the return 6 months after the corporation's year end. And note, however, that you have 6 months to file, you have 3 months to figure out your taxes owing and pay those taxes before the 3 months. If the due date falls on Saturday or Sunday, which I don't think it doesn't this year, or a holiday, the return is considered to be filed on time if you file it by the next business day, and a payment is considered to be made on time if a weekend or a holiday comes into play on the next business day as well. Late filing penalty, so if you don't file your tax return on time, you're going to have a 5% penalty on unpaid taxes plus 1% of the balance owing for each month that your return is late, up to a maximum of 12 months. And so this basically just says file your returns on time even if you can't make the payment, don't get hit with a penalty. If you don't make the payment, there will be interest on your amount that is going to be, for personal taxes, would be owing May 1st, 2018. So I'd rather take the interest hit, but not the interest on the penalties. So make sure you file on time at the very least. Try and make your payment on time. You don't want to pay any unneeded interest. Can help it. So we'll move on from corporations versus sole proprietors to deductibility of expenses. So what is a deductible expense? An expense that can be made for the purpose of gaining or producing income. So some expenses would be interest on debt incurred for business purposes, office expenses that you need just for supplies for running your business. Legal and accounting fees are deductible as well. Property taxes for your office, salary and wages to yourself or your employees, maintenance and repairs, insurance, rent, things like those. The next point, capital expenditures are not deductible, but you put them in a pool and then they depreciate and you take deduction based on the depreciation allowed for that pool. So items such as furniture, buildings, vehicles, those are capital items. Those will go into a pool and you'll take a percentage of those as a deduction every year from your taxes. Land is also a capital item, but it's not depreciable. It tends to appreciate in value. Therefore, you don't want to take a deduction for that. So another point, your expenses must be reasonable. You can't just go and pay for something that's completely unreasonable and expect to claim the full deduction for it. So that's an important point. And arm's length, so an unrelated transaction, someone you're not related to. If you're buying something off them, it is generally viewed as reasonable, as two unrelated people tend to not want to give good deals to each other, I guess. If I'm buying something for my wife, for example, we might not transact at fair market value, but if I'm buying something for one of you, the negotiation should lead us to the market value, I guess.
Before we move on, Mark, the expenses must be reasonable part. One thing to mention there, if you have incorporated and you are running, people think, well, I have a company so I can just expense it, right? Like, oh, I took my family out for dinner and I'm just going to expense it and stuff. And we get a lot of that where people just, when Dan mentioned a box of receipts. So just be aware that often those receipts, when we go through that as part of our job when we're compiling your financial statements, we move non-deductible expenses into your shareholder loan, and that will be taxable to you personally. So just don't come under the assumption that you can just write it off or deduct it or run it through the company, because that's not real life. So just be aware.
So some more items for expenses that I should go through. So as Jason mentioned, meals and entertainment. CRA deems that you're going to have to eat regardless of whether you're transacting business or not. So they only let you deduct half of it because part of it's considered personal all the time. Your computers or laptops, I mentioned capital expenditures before. These will go into a pool as well. They depreciate quite quickly in that pool. I think it's 55% the rate right now. Some automobile expenses. If you're business use of a personal vehicle, so you have a corporation and you're using your personal vehicle or anything to perform your business, your business can deduct a portion of that. I think it is, we change the rate every year. Employer is able to pay 55 cents per kilometer. That's for business use for the first 5,000 kilometers, and 49 cents for each additional kilometer, so they can claim that as a deduction. And since you're using your personal vehicle for this, that isn't a taxable benefit to you personally. So that's a nice break. But the one thing to stress about automobile expenses is that CRA will come after these expenses a lot. Like they tend to audit automobile expenses for reasonable amounts. So a big thing to keep in mind is keep a logbook. They want to see a logbook of I drove here to here, this many kilometers on this date, it was business. keep track of your personal kilometers, and then you're only going to get paid, or you're only going to get to deduct your business kilometers, and obviously your personal items, like Reese was alluding to, you're not going to get any deduction for that. Home office expense. Sole proprietors who operate out of their house, they are able to claim home office expense on certain expenses if they meet the criteria. So the criteria include it must be your principal place of business where you meet clients. So more than 50% of the time you meet your clients, it has to be there. The other 50% can be wherever. The space must be used exclusively for the purposes of earning income. So your kitchen table won't qualify as your home office. You need to have a separate space for it. You must meet clients on a continuous basis or where business is done on a continuous basis. So it's got to be an actual office. And so if these conditions are met, then you can claim a deduction for certain things, certain expenditures that you have related to your house. So mortgage interest, property taxes, your rent, utilities, your insurance. But the big thing is that these expenses aren't completely deductible. They are prorated based on the size of your office compared to based on the size of your entire house. So if you have a 1,000 square foot house and 100 is your office, you can claim 10% of the rent expense, 10% of your mortgage interest, assuming you meet all those other criteria I had said about meeting the clients in that office and performing your business there. Work clothes or uniforms, as long as if it's scrubs and you know that those are only used for work, then you can claim those, but if you're a sole proprietor. If you're using the clothes or the uniforms personally, then none of it's deductible. Travel, if it's business related, you can generally claim your flights, your hotels, half your meals again, but you have to have a business reason for doing the travel. Another item they commonly look at. Convention expenses, you can deduct travel related to 2 conventions and the costs related to those conventions, so 2 a year. The one rule that I've mentioned is that if your course is offered in Calgary but you want to take it in Toronto or somewhere down south, you're not going to be able to claim all the expenses on the destination convention. You will be able to claim what it would have cost you had you gone to the convention in Calgary.
So
Or
does
the
that
closest place.
include that workshop as well? Like travel and workshop?
Sorry?
For the convention expense? So if taking a workshop costs $500,
Yeah.
that's included?
Yeah, you can claim that, yeah, and you can claim the travel there, but if the course is offered or the workshop's offered in Calgary and Toronto, you're going to be able to deduct what it would have cost you had you gone to the one in Calgary, not the one in Toronto. So kind of runs with travel expenses, I guess. So some non-deductible items Reese was alluding to. So any personal living expenses, so any TVs for your living room, not deductible. Fines and penalties, so your parking tickets, your speeding tickets, whether you're driving for business purposes, not deductible. Golf fees and memberships, they've actually adjusted this so you can go for dinner at a golf club, but you can't. You can take your clients for dinner and half of that would be deductible, but no greens fees, no memberships, nothing like that. And don't try to claim anything yacht related, they will shut that down.
What if you let your clients have the time on the golf course?
They won't, it's just a non-starter for them. They wouldn't even actually look at receipts from eating at a golf course. Like, but I can't remember when it changed, but now
So
you
the
can deduct
50% rule doesn't apply to that.
The 50% now does. You can take your clients to a golf course restaurant and eat, but the greens fees and anything related to golfing, not deductible.
There's been a bigger push in recent years to look at deductibility of golf fees because, like you said, depending on your business, golfing with clients, potential clients is done often. But I don't see CRA waiting on that very soon. Although, fingers crossed.
What's the entertainment component for that then? Like what would that consider?
Sorry, what do you mean?
For the 50% entertainment?
Entertainment would be like, so hockey tickets, you can buy hockey tickets and that would be half deductible as well. So, sorry, part of meals and entertainment, yeah. So if you buy hockey tickets for your family, I had a couple other examples here. I'm finding you right now. So that would be entertainment. No tangible items for entertainment. You can't buy like gifts or anything like that. But golf apparently is just something that they would likely see too many deductions for that. So they're just not willing to waive on that yet. But, yeah.
Is it specific to golf, the memberships?
I think it could probably get into more memberships. Depends what you have in mind, I guess. But I think memberships being anything kind of sports related, you might want to look at. But entertainment related, I guess, that kind of stuff. But golf is one that we would see a lot here, I guess, being in Southern Alberta. So.
Under exclusions, last year as a professional, I was not able to claim insurance.
Oh, really?
Is that something?
As a sole prop?
Well, no, as a psychologist.
Okay.
But is there a difference between a business and then professional? CRA said I couldn't claim that.
Were you working for yourself as a professional, or
Yeah.
were you working?
Was it life insurance?
No, professional insurance, like professional liability.
We could look into that more for you, maybe, but I don't know off the top of my head why that one wouldn't go. But
I think something like professional fees and stuff like, TCL is so, TCL and the association,
Right.
association fees are partially, so the association of membership fees, those are.
yeah.
If it's a membership or association that you need to be a part of for your company, it's gonna almost always be tax
Yeah.
deductible. It's more like a membership at a golf course or a membership, you know what I mean, where is it really business related? Is this really something that drives your business? Even though I know I talked about the professional meetings on golf courses, but aside from that being a non-starter, you'd have to talk to your accountant about specific memberships or associations, but often nurses, things like that, CPAs, right, like our membership fees would be.
So what about if you're a membership with the Lethbridge Chamber of Commerce and the Southern Alberta Women in Business?
I would need to know more about the membership, I guess. Like, you can come
Well,
back to me.
like the Lethbridge Chamber of Commerce, or like the Southern Alberta Women in Business is $60 a year.
I guess is it helping generate business income for you would be kind of the
Okay,
yeah, that would kind of I guess be where
that
I,
makes sense,
yeah.
thanks.
No problem. So some other considerations with deductibility. So CRA risk areas, I mentioned this earlier, the personal use of a company vehicle or any use of the vehicle that you're trying to claim expenses, keep a logbook because they will come audit, and if you don't have it, they might deny everything. Or they'll at least you'll have to provide detailed records so that they can you can support your deduction, I guess. Meals and entertainment, so half deductible again. Must have a business purpose, so as Reese alluded to, taking your family out for dinner, that's not 50% deductible, that's not deductible at all. And a new one we've seen this year is professional fees, so through your corporation or through your sole proprietor, they're kind of looking at invoices more, I guess, and I think that has to do with if you pay an accountant for your personal taxes, that's not deductible. If you're paying a lawyer for some personal legal fees, that's not related to your business, not deductible as well. So I think, I don't know if people were trying to run too much of that through before, but they're looking at invoices now to see what is reasonable business expense as far as professional fees go. So your accountants, your lawyers kind of. So ensure your company is not deducting personal expenses, because if CRA discovers this, it will result in the loss of the deduction at the corporate level, so you'll be paying tax in there, and it'll also result in a taxable benefit to you, so it's essentially double tax. Just a quick point on employee versus self-employed. As an employee, you're going to be very limited to the deductions you can claim. Self-employed, you get to claim a lot more deductions related to your business. So the distinction can be very significant when considering items that you may be claiming as a deduction. If you're an employee, and you have deductions that you want to claim. They'll usually require your employer to provide you with a signed T2200, which will state the deductions that you're able to claim for your employment purposes. The status of employment is also important in determining your withholding requirements, and employers must withhold tax and issue a T4 to you if you are employed. So we'll move to payroll now. So as business owners, if you're paying wages to employees or even to yourself, payroll will be required. So this means remittances will be required to be made to CRA, including the employee and the employer portions. And then an information return, so a T4 slip will also be required to be prepared for the employee that is receiving that wage. And that T4 slip is what the employee would use to claim the income on their personal tax return. So the payroll process, the first thing to do is open up a payroll account. This requires calling CRA, and they'll ask for some information, and then they'll get you set up with a payroll number and go through that with you. The next step is to calculate the deductions. So I mentioned some of this earlier. You may have deductions such as CPP, which will be 4.95%, as I had said earlier, at $55,900 plus the $3,500 exclusion. And the employer will match that amount as well. So the maximum amount of CPP is $2,593.80. You're paying that as an employee, and your employer will match that. You may have EI that has to be withheld as well. Similar calculation, you don't get the $3,500 exemption. The maximum is $51,700, and you're going to pay this at a rate of 1.66%. So maximum amount as an employee you will pay is $858.22. Your employer has to pay that times 1.4, so their maximum is roughly $1,200. You'll also have income tax deductions that have to be remitted. I think the form TD1 will help you determine those income tax deduction amounts, and these will all be remitted to CRA within the required remittance period. So the next step is remitting the deductions. The deadline for the monthly remitters, so if you have to remit based on CRA standards, you have to remit monthly, then the deadline is 15 days after that month is ended. You may also be allowed to be a quarterly remitter, and those remittances will be due 15 days after that quarter is ended. Next is complete and file the information returns. So today was a big day at our office. The T4 slips are due at 5 o'clock today, I guess. So yeah, we're done that, I guess now. So you remit those to CRA, or I guess we file them with CRA, and then copies get sent to the employees. The employees now have the required information to add their employment income to their tax returns. And then the last point, penalties and interest. For first-time offenders on the, if remittances aren't made on time, then the penalties will range from 3% to 10% depending on the number of days you're late. So you're going to be up to 10% if your remittances are more than 7 days late as the employer, because the employer is the one that has to remit all these amounts. Second-time offenders will see an increase in that penalty by 100%. So 20% would be the max that you would pay if you're late, making remittances late for the second time. Penalties on late filed information returns, so the deadline being today for our T4 slips. Penalties on those is $100, or if this amount is more, so if you file 1 to 50 slips with CRA, the late filing penalty is $10 per day per slip, so up to a maximum of $1,000 per slip. So if you have 20 employees, that can get pretty expensive. So make sure you're meeting your deadlines to avoid interest and penalty zones. Last slide here, GST. So if your business must register for GST purposes if you've received consideration, so revenue or income that is greater than $30,000 per year related to commercial activity, so your business. If registered for GST, you're required to charge GST to your customers on the sale of goods and services and then you are required to file a GST return with CRA. You will remit taxes payable if your GST received from your clients or your customers was greater than what you had paid for purchasing supplies for your business.
Or if you're dealing with another company, you still charge you GST.
Yeah. Unless there's some exclusions that depending on the type of business you are, like I see a lot of farmers, they're GST exempt on sale of inventory and stuff like that. So unless you fall into those exclusions, any sale you make will have GST on it. And so you will receive a refund from CRA if the GST you've paid to purchase or make or buy supplies is greater than the GST you received on your revenue that you made. Just a couple more notes on charging GST. So if you sell taxable goods or services in Canada and you're registered for GST, you're required to charge your customers GST. You must indicate to your customers that they are being charged GST. You must provide a receipt or invoice that indicates the amount of GST that you're charging. And you also must show the rate of GST that was applied on the invoice or the receipt, so generally 5%. This information will help with the purchaser, provide support for them to fill out their GST return. It also, they're able to get your GST number as well, and then they can go on CRA's website and determine that you are in fact registered for GST and not charging an extra 5% on your sale.
Do you have to register, like can you register for GST if you're not incorporated?
Yeah, for sure, yeah. So it's similar to the payroll that I talked about, the process. You phone CRA, they'll ask you some questions. Are you over 30,000 of GST-able income? You don't have to be over that. You can voluntarily register for GST as well. That might be a good spot if you're paying, if you would receive a refund if you've paid more GST than you've received.
Like if you're buying a lot of supplies?
Especially for a startup. So I mean, you're buying more and your income's not quite where you want it yet, but it's going to get there at some point. You might want to register for GST so you can get that refund. It's a nice little cash injection to your business.
What about like for international clients? You still charge GST to them?
I think so. I think as long as you're earning income, like I would think so. I don't think that they're gonna be able to get the GST deduction. So I mean, the government's gonna get their 5%, and there won't be an offsetting claim by the recipient of the product you've sold.
And generally, it's actually based off of the taxable supply of goods from a Canadian entity to a Canadian entity. So typically, you won't have, unless, again, generally extreme circumstances, but generally you won't have GST.
On a, like say if it was like an agency fee to an international client.
International client, but no.
No. Great.
And then last point here, keep your records for a minimum of 6 years. So you must keep your records that show the amount of GST you collected, the amount of GST you paid on eligible business purchases, the amount of tax that to be refunded or deducted from net tax, and then keep detail of the goods and services being traded so that if CRA does audit these, then you have the records readily available and you can prove that, hey, I'm deducting or claiming this for this reason.
So when you say records, we're talking about sales slips and then any purchases we've made where we've paid GST.
Yeah, so I mean, you want to keep receipts that will support that. So
So it's 6 years? They're not going to come ask for 7 or 8 years?
They can if an audit's open. So I mean,
so what do you recommend? Because our stuff takes up a lot of space.
7 years. 7 years is the statute of limitations if they don't already have a file open.
Okay.
But once it's 6 years later and they open a file, that date, then starts the 7 years.
Okay.
But I think I don't want to say CRA is reasonable, but I would say that in general, like they're probably not going to ask you for 13-year-old records. We always tell our clients 7 years is typically what we talk about, and for GST it's 6, but 7 is
Seven
a
years
safe
does
number.
happen. I was in the last 6 months of my school and got audited on student loans. I had to go back to employers I worked with 7 years
Yeah.
prior to find my gross and net monthly income, and they had to shut the box like they did with my
No. All right, questions for myself, or Daniel, or Reese, or anyone?
Just to sort of summarize maybe a bit, some of the things that Daniel sort of talked about, and I think it goes hand in hand with how much information Mark just presented over the last 30 minutes or so. Find an advisor, find someone you trust, and find somebody knowledgeable that knows all of this in-depth tax stuff. It's there's a lot, and there's a lot of information, and every business is unique, and there's so many different situations. So when Dan mentioned having those professionals and having those people that you trust, find them, ask them questions, take advantage of having those people by your side, because they will, your company might have something specific, whether it's a deductible expense or a tax situation, so use those. And then lastly, if there are questions, I think we're going to a break pretty quick. We have 6 CPAs here that are ready to answer questions. If you guys didn't want to ask in front of the group, or it was very specific to your company, pick their brain a bit. We're going to be here for a few minutes, so please feel free to take advantage of that. And thanks for having us.
Thank you.
Hey, awesome. Thank you, Dan and Mark and Reese. Okay, great. So we're going to have a break for 10 minutes. I know for myself that I really enjoy the part about record keeping. It's going to help you understand if your business is actually growing, and it's going to help you be able to set that up for success. I also enjoy the part about GST and HST. Register for the GST and HST number. It's really important. So we're going to have a 10-minute break now. So we return about 7:50, and we'll get started with the next presentations. So thank you very much.
Have some more pizza.
Yeah, more pizza, please.
There is lots there. Ask them questions.
That's why you say this.
Hi, Mika. How are you? Good. Megan. Megan. Oh my goodness. I'm sorry. It's okay. Good. How are you? Great. You're one of the 6 CPAs. Congrats. When did you? Oh, that's
Literally
great. Yeah. Did you already go up for the grad and everything like that?
Yeah.
Oh,
So I
that
went
must
up
have been so
when
much fun.
Jennifer.
Oh, okay. Yeah. Yeah. Awesome.
Now I'm like, see you later.
Yeah, burn the books. Yeah. What's going on? That's great. I work at EDL, specifically at Tech Connect. I'm the program. Yeah, sorry. I'm their entrepreneur program manager. So yeah,
I know if I know his daughters, but we don't know each other.
Yeah. So that's so funny.
My sister actually knows.
Okay, yeah. Well, he's a CMA and he's taught cost management here before. So anyways, yeah, he's one of our business advisors.
All this time.
Yeah, right? Figure out where.
Right?
For all those like 45 years. That's all. Yeah. No, can't think of it. Right?
I know me too.
So I'm like, I think I should start meeting. Yes, yeah. I just texted her.
Right? Yeah. And then like,
I know, I was like, ah! Nice to meet you. Sorry, you have a question? Yeah, I'll get out of here. Okay, yeah, that's well, yeah, because you're the I'm just working so I was thinking about getting one of those. Now it's not yeah, we went like yeah, that would never work with not the donation, just keeping all these receipts.
So that would eliminate some of my receipts.
Oh, yeah.
I have a lot because I donate to a lot of different places.
Oh, yeah.
And I always add a bottle of champagne because it's just a nice touch. Okay. Yeah, I'll show you. Give me that. If I have any other Thank you.
Yeah.
And you don't plan on paying to travel to so we'll have others sitting down. Now you're dealing with what's going on. For him, the numbers didn't just fluctuate based on how much and that's a What he said,
'Cause
last year we cut it. We made less and less and staff to clean up.
Megan's.
Well, you guys can.
I told them. Right? Bands, what are the bands? So many.
So they also have like a long, they're like really, like there's many actors, many
But really, we don't get when it's free there.
It depends how you live in
A couple years ago, we try to do it like the night of the awards or after this year. Yeah. Awesome. Let's do it. Yeah, that's working. Okay, thanks a lot.
All right, we're ready to go.
Photo op. There you go. Yeah. We're good?
That was so real. Totally. Okay.
I'm okay. Somebody here will take his pizza home? Probably.
All right, everyone grab their seats. Okay, so we're really excited for our next presenter. We've got Bruce Thurston. Bruce Thurston is a business analyst at TechConnect. He is an amazing business-minded individual, and he's going to talk about the executive summary. And so the executive summary, basically, this is the first page that we're going to look at when you submit your business plans. So that you know, like this is what's the summary of your business, and this is going to hook the investors into buying into your idea. So take a lot of notes. I'm really excited for this presentation, and I'm going to pass it off to Bruce. Let's have a round of applause for him.
So the PowerPoint presentation is loaded up online, and there will be a few slides with specific questions, and I'll talk about them in more detail. The source of information is from an organization called Mars in Toronto, and they have a ton of information on entrepreneurship, like a ton. And it's very, very good stuff. Gets into details and can help you out. So I put this particular context together. As you can see, this one says the Business Plan Executive Summary Workbook Guide, and it leads to all kinds of different things, like how to do an effective pitch and things like that, that my colleague Darren, after he's finished eating his cookies tonight, will be presenting on. There's an inside joke there. So, glad to be back. One other thing that we've got right now too is Tech Connect is promoting a 3-night series to help you understand that business model and customer value proposition that you put together in week 2 and week 3 of this group. And I'll be doing a session at Tech Connect, I think it starts at 6 o'clock on Wednesdays. So next Wednesday for 3 Wednesdays till about 8:30. And right now we have 3 people registered. And so if we don't increase the registration, then the beautiful part is I don't have to prepare the course this weekend. All right. So is it free of charge, Mika?
Yes.
Free of charge. Unbelievable. Only in Alberta, and it'll be at Tech Connect on the north side. Okay?
Where's that at?
Tech Connect on the north side. Mika, where is that?
3582 30th Street North. So behind the Walmart there, north of the Walmart.
So we would say Google it, right? And there's a
Yeah.
Tech Connect, right? And it'll actually have a map for you there. And if you come up 43rd Street, don't go too far. If you hit gravel, you've gone too far. Interesting stuff. A beautiful facility, multi-million-dollar facility that some of us hang out at. So Mika and Darren are there all the time, or pretty much, and I'm there typically on Wednesdays. So the offer was made to come and see us. By all means, send some emails. We'll book the time, and you'll end up telling Mika at the beginning to set you up in the system, and then we'll spend time. I'll give you an example. I met with 3 people today. Some I've been working on with it for a couple of months now, and it's really interesting because everyone has a unique situation out there. So you had the accountants, and I got everybody in my company to learn about accounting and stuff like that, but we taught a very basic, simplistic process. And when I was watching the presentation today, I keyed in on YouTube, Introduction to Balance Sheets, and there's a nice little video on how to create a balance sheet in 1 week with a lemonade stand. Okay? And it starts with some very simple things, like lemons. And it shows you how it fits into a balance sheet and an income statement. There's great YouTube videos out there. Oops.
You have to be over there.
Great YouTube videos out there to be able to help you understand that the basics if you haven't had any accounting training in the past. And CRA has a wonderful website that will give you an indication of a lot of the deductions that you're eligible for as well. And Mika, are you going to be doing a financial presentation at Tech Connect? When is that?
It will be the 20th, the 3rd Tuesday in March.
March 20th,
Yes,
the
and
3rd
I'll be going
Tuesday.
over basic cash flows.
Basic cash flows.
A lot of examples.
We're recognizing that most of you are startups, and we're not looking for things that are elaborate. That's why Morley went through the cash flow a couple weeks ago. So we're not expecting you to be balance sheet genies, right? And that's what the math teacher in grade 9 told me. I must be a genii because my answers he could not figure out. So from an executive summary perspective, let's start off with the graph. And then I looked at this visual and said, in today's day and age, that's not the right visual to have on a screen. It's amazing, right? You know, it's just stupid on my part to think, but it'll be memorable. You'll be able to say, he put up a stupid video, right? But the point is lead with a compelling statement in your executive summary. And I'm going to show you a 2-page executive summary after this. And basic questions is, I want to be able to read in 1 to 2 pages what you're all about. It's as simple as that. Grab. I spent 4 days reviewing 14 business problems at the University of Lethbridge here, and nobody wrote an executive summary that told me what was in the rest of the document in a nice, easy, understandable fashion. So you don't have to do something big and fancy. Get to the key points. Don't be wordy, because us as screeners, when we start reading your stuff, boy, oh boy, if it's 10, 20 pages long and it's all paragraphs and you haven't used bullet points and you haven't, used a little bit of smart art from Word and put things in pies, charts, or some different kinds of formats that break it, it gets boring. So we want an executive summary that says, hey, because most people will just read your executive summary and go no further. They'll look at that component and they'll move on if they find it to be boring. We won't because we're committed to the cause, right? Okay, so what's the problem? And in week 2, you had Renee and Mika. They talked about that customer value proposition. Now we said, what's the pains and what's the gains that you have, that the customer has, that you're going to be solving, right? I was with Don the other day at Tech Connect, and he's got an apparatus that he's developed a prototype to solve some pains when people are physically moving, right? So if you fit that category, then he's got a potential client for those people. So what's pressing an important problem you're trying to solve? Or what is the opportunity that you're trying to address? In the executive summary, just state it. Keep it nice and clean. Solutions. So again, with that customer value proposition, we went to, so what's your idea? What's going to be your benefit? What pain relievers are you going to have? What gain creators are you going to have? So that little chart that they took you through is so vitally important because it puts key points in and it tells people what you're all about. Very, very important. So solutions. Our business model that we talked about. So I had a whole series of videos that we showed you, I guess the 3rd week that was, and it talked about the Jersey Square folks renting jerseys to people in the sports world, and review those videos and take a look at how they put it together in this 9-sector segment. So in this extended course that I'm offering next Wednesday for 3 weeks, we're going to go into this in much more detail. Because one of the keys is that when you tell me all customers need your product and service, we have a problem. Because not all customers need your product and service, it's very focused. So Kim has a bakery in Fort Macleod. She has a specific market she's dealing with, folks in that Fort Macleod region. And I would be, when I take a look at her business plan, I'd be calling up population of Fort Macleod. When I did that, I found that over the last 100 years, the population has changed by 100 people. Progressive. But it's the folks around the area, too. And then she went to the farmer's market, and I discovered her last September. And so did my wife. And our cash got depleted because she has a wonderful product. And she's got a great story. She went to San Francisco to learn how to make sourdough bread. Holy schmoly. And now her bread's in Mocha Cabana. Do you see how it works? A little bit of getting out of the walls, talking to people, networking. When she puts that in her business plan, that has credibility. But if you just built a business plan in your basement, like I have done in the past, and you don't get out of the walls and talk to and find out who your customers are, it doesn't add value to your business at all. It's just a pipe dream. You have to get out and talk to people and verify that, in fact, what you're doing has value to somebody out there. Very, very important. So you'll break these 9 areas down in detail over the 3-week period. So that's what we'll be offering for you. And it won't be easy because we're going to ask you a lot of questions. And it won't be me lecturing. It's going to be you doing the work and trying to think it out over the 2.5 period there. And I think they might even have free beverages while you're there. Are they going to open the beverage machine for them? The little things you learn. Product and technology. So what is it that you're selling? So in Kim's world, she's doing baked goods, but she told me she doesn't do donuts. Because right now, the donut machine, that's pretty expensive. You got to turn a lot of donuts in order to pay for that donut machine, right? So why go there if it's not part of the game plan at this particular point in time? So I thought, very ingenious. She's been thinking these kinds of things out. How do you like this? Isn't that cool? Okay. So what's the underlying magic? So that's why I put it in a bottle, right? A light bulb like that. What's the magic? What makes your company special? If you're going to open up an electrical operation, what's different about your electrical operation to someone else? If you're going to open up social media, what's different about your social media to everyone else? Because when we screen it, we'll say, oh, another one of these. But having gone out and being able to say, we talked to these people in this customer segment, and they said, you've got a great idea. helps legitimize that business plan that you're putting together. So what makes your company special than other people that are out there? Tim Hashikowski was here a couple weeks ago. I call him a social media engineer. To me, he has something, a gift that's different than any other social media person I've met in Lethbridge so far. He's so good, he's in Calgary now. So we got to hang out via Google. I bought him dinner tonight because he happened to be in town, but I'm asking him a number of questions about can he help some of the clients that are here. So I don't know if any of you took the opportunity to connect with him to actually talk to him about how you could potentially discover if your market is legitimate out there. So very, very talented individual, maybe 23 years old. I'm jealous. Marketing and sales strategy, and this is where he would help you out, is what's your go-to market right now? How are you going to get out there? How are you going to utilize technology to be made aware of out there? This happens to be, and because it's in the slides here, a very, very interesting presentation by Murray McKay, who's involved with the Mars Group, and I watched this one and I thought, very interesting presentation that really lays it out nicely for you as to how to think about marketing and sales strategy. I wish we could cover it all in this course, but we've got limited time component to it. So take a look at this particular site and play the video on YouTube. Things like external environment competition. And one of the challenges is that business model really focuses on you, but one of the videos talked about what's the trends and what's the external factors that are affecting your business. It's important that you realize that. So in a down economy, there's some businesses that really thrive, especially those that work in used or replacement type versus new. Okay, so rebuild is very, very common in down economy. What thrives in high growth economies? And take a look at where Canada is right now. They talk about the GDP in Alberta is over, what, 2.4 or something like that. It's fastest growing province. It's great to hear that people are starting to get employed again. Fantastic. Lethbridge has been a very safe haven. Some will disagree, but in comparison to Red Deer, in comparison to Grand Prairie, it's been a safe haven. You never make a big win, but you never make a big loss in this particular region. Thanks to agriculture, the government being a major employer, that kind of stuff. So when you're thinking about your business, who will it be for? And Fort Macleod's small, but the region is large. And then you transfer 30 miles away to a center that's got 90,000 plus people. Some pretty cool marketing opportunities. It's work as someone. You got to get up and make deliveries. That's the real work of small business. So you do Tuesdays and Friday deliveries? Yeah, and you're up really early making product. Who said being an entrepreneur is easy? And you get to write something off, right? You know, like, wow, unbelievable. I'm so disappointed I can't get my parking tickets covered from tax deductions. That's a kicker for me, boy. Okay, so let me just go back. You can see, here's a simple little chart. And I just picked this competitive analysis and what other people have versus you. This one says features and that. I'm looking for benefits. So if you can stress what your benefits are compared to other people out there, you've got a real win. Because that's what we're going to want to be listening about. That's what we're going to be reading. We don't want to say, oh, we've seen this before, or another one of these. So when I used to do the screening, I would spend more time than probably a lot of people putting the darn thing together, because I would Google everything. And so when you came in front of me as a judge, I understood your industry very, very well. So you could really cut through the business plan software people that just slapped something together and copied to those who really knew what they were talking about. Okay? Because that doesn't serve value. And I must say, I got into business planning in the mid-90s in my company. And by using business planning to move my organization forward, I quadrupled our bottom line in 3 years. And it didn't have a dollar and just ended up being $4, right? It was significant coin. And we doubled our revenue, and we didn't increase a lot of our labor. We did things a lot smarter by using business plans to figure out where are we going, where do we want to be, and set a target. So there's huge, huge value. It's not just for the banker. It's not just for satisfying accountants. It's for you to use as a tool to be able to set. You won't achieve it. You'll sometimes exceed or sometimes be short. Great. The fact is you're using it as a roadmap to move along. So that's why these are important. So this one here, of course, what can they do better than you? What can you do better than them? That kind of idea on competition. The financial analysis. This will be tough for a number of folks, but it doesn't have to be. If you take a look at the stuff that Morty had and the presentation that was there, and just start to look at what are some of the basic expenses that I'm going to experience here, and just think about them. It's a first start. Doesn't have to be overcomplicated. You want to know about the financials, go to the Lemonade Stand YouTube video. And seriously, that's what we did in our company when we taught everybody about financials. Because I'm a believer that the accounting financials are the language of business. And you've got to be able to understand the numbers. For those of you who say, I'm just going to give it to my bookkeeper, wrong move. Okay? One of the clients we had at 3:30 today, he's getting it. He's doing very, very well. I'm saying, what's your margin on this particular product? And he says, well, Bruce, prior to talking to you, I didn't have a clue. I've gone and figured it out. I said, you have a number of products. Which ones do you make more money on when you're selling it to customers? What type of customers are buying this product versus other products that you've got? And he says, well, somebody as old as you buys this. Someone who's cool buys this. Everywhere I go now, I'm portrayed as old. It's sad. It's really, anyways. But I hope I've got young spirit for you. So what's the assumptions and metrics? So that sounds fancy, but if you're going to sell X number of units over the next few months, that's one of your basic metrics. And what's your price point that you're going to have? And you will have checked out what your prices are. So this guy, at first, he was charging, I'll make up a number, $30. He went out to check the market, and he's now at $40. That's money that's now going to pay a lot of expenses when he wasn't making money and driving something to the bottom line. So it's really important that you know what the market's willing to pay out there. We teach a new venture course at the University of Lethbridge. It just started this semester. And we actually ask the students in the questions when they're asking about problems and things like that, we say, what would you pay for this service if it existed? And you ask them rather than make an assumption of what the price will be. Ask them. Because if I can add another $1 to my bottom line, great. The example I give when I was teaching at ExecuServe was people that are cleaning houses. I've heard rates from $15 an hour, $20 an hour, $25 an hour, $30, $35. I once had a $50 an hour person, and I had one in the class that said they're going to charge $100. I said, really? Okay. I don't think they ever opened up their business, but that's okay. But what's the difference between a $25 an hour and a $20 an hour? It's very hard work. What's the value difference? So I won't tell you right now I've got a real deal, but I'm not telling that person that they've been the best I've ever had. It's up to them to find that out. So you want to know what the market is and just snoop. Just snoop. It's called competitive intelligence, by all means. So you'll be able to put some of your financials. So cash flow will be key, and understanding what you're selling and when you're selling over what period of time. And don't make the assumption every month of the year you're going to have the same amount of sales. This gentleman that I saw, I made him go back 4 years in his business, month by month, to show me, and he says, I don't get it. Every July and every December, I don't do much for sales. I said, okay, activities drive costs in a business. So what activity resulted in those sales? Oh, holidays. Oh, people don't want to buy my product around Christmas time. Yeah, I was in the roofing business. There was no sales in December and January and February. And this year, not much in March by the looks of it either, right? So you're trying to make your money over those particular periods. So think about over a seasonal period where you can do sales. And again, I interviewed a guy the other day, and he said, Bruce, I can do 1,000 units a month. He says, stretching it 5,000, 10,000, I am SOL. I said, why? Because I don't have the money to have the inventory to pay China for my manufacturing. So he says, I can manage a little stuff, but when we get to 10,000 units a month, I'm in big trouble. And his product was selling for $70, and he has a beautiful margin. which means what do I have left over after I paid China for the cost of that particular product? Margin is what it's all about. Angel, you want to talk about margin in the food service business? Not good. Every cent costs. You've got to watch everything.
Restaurants Canada's analysis for the 2017 was 4% after tax.
4% after tax. Google, margin on restaurants. It'll be an eye-opener. You need to sell a lot of alcohol because that's where the potential is. So imagine if you walk into a place and they're not selling alcohol in it, they're relying on food product and wastage. Earl's has it broken down to how many cloths they'll use to clean a shift. Right? They've got it broken down. They've got digital scales, and some schmuck is getting the food ready for their pizzas before the store opens and weighing it on a digital scale. Activities drive costs. So whatever you're doing costs you money. So sure shooting, a client that I have in Strathmore is going to be paying more than one I have in Lethbridge. And also for a few tires that I've blown on the trip. So, and that's not a tax write-off either. So team, who's on your team? So for those entrepreneurs that say it's me, myself, and I, no. And you can, like a lot of them will read, you've got the accountant and you'll put down our names once you've talked to us and that kind of stuff. But it really is bonding with and really establishing relationships with people. Frequently I'll say, who's the supplier? How can you work with the supplier? So one guy I spoke to today, I said, what's the terms that your supplier has? And he says, I got to pay him in 15 days. I said, but what's the price structure? And how much more do you have to buy to get to the next level? And what's your year-end volume discounts if you meet that? He says, well, no, I never thought of that. I said, of course not. You have to get in business and realize there's all these opportunities with different types of suppliers. So he's going to be at Home Guard Trade Show. I said, what did the supplier kick in for free for you? What? What did the supplier kick in free for you? Why should you have to pay full price for that piece of equipment that thousands of people are going to view? It's having dialogue with people. That kind of stuff is so important for you. So on your team, who's special? It's always good to have an advisor, but it's better when you talk to them rather than just put it in your documentation. So implementation roadmap, I really looked for a lot of shots last night to figure out, but I thought this was rather unique, you know, very confusing. Somehow he's got success, but I guess he knows what all this means. I sure don't. But the bottom line is we want to make sure you have a roadmap. So these papers that I was reading this weekend, they said, well, we're going to get a social media guy. We'll get him in a month, you know, and then we're going to do this. That might take 3 months, and we're talking India as a project. That's where this case was from, and I'm going, really? Show me something with some substance. Tell me what your logical steps are going to be over a period of time. You might not make them, but at least you've got a roadmap that you're thinking about and how you're going to achieve it. So that's important. Oops, I got to get going here. So the ask. Don't be afraid. So one of our prize winners last year was a wonderful individual. Her business plan, when she did it, I think she was in this a couple of times, right? I don't think it was just once. She did a 50-page business plan. We don't want a 50-page business plan. But she did a business plan because she needed to think everything out. And she documented it. So my challenge working with her was getting it down to a 20-page business plan, of which she did. And obviously it meant enough that the judges gave her first prize, which was fantastic. But she had spent the time to understand everything that she could about the business plan. And there were regulatory issues with the province that she had to know. She needed to know the training requirements. She had really done her homework over a period of time. And it was rock solid. And it didn't matter if she was in this or not. Her business is up and running, I understand now. And it's pretty impressive how she was thinking and the way she was thinking. So we're not looking for a 50-page. We're not really looking for a 20-page if it's 5 pages rewritten 4 times. That's the other thing. You'll often say the same thing 3, 4 times in the document. Don't do that. Just tell us once. Okay? And then summarize it in the executive summary. I don't need to repeat it, because I'm terrible. I take a red pen, because it just drives me wild. It's a waste of time. You only have so much time to impress folks that you're got the ask for. So what would you use the money and the in-kind at this particular competition for? So the art of asking. I thought that was a cool. So I put that one. Okay. So let's go back now to, so you would have received, you would have received this document. See how I'm going to expand it, right? Here we go. Okay, so this is a really neat two-pager. And you'll notice that these guys have been creative because they just haven't filled it with one page. They've gone and put some contact information, some industry, some development stages on the side with some key metrics in that. And then they've talked about what they're doing. Easy music, the problem, right? Didn't we just cover that, right? Now, let's get Gertrude working here. And then they got the solution. What do you know? There's the business model, and they've captured the key components of it. Online purchase of digital music was the offering at the time they put this together. See the development stages that they're focusing on. Year founded would be now. Funding opportunity, use of proceeds, what they're going to do. A little bit of some metrics that they've got. So they've got all this kind of stuff. I don't expect you to have to be able to read it, but it's online for you. Product and technology, that's one page. Then on the second page, they have marketing, sales, competition. See, they've got a little grid there, but you don't necessarily have to put it in the summary at all. Just highlight what you've got. And they've got the team and their skill sets in the process. Right? Two-page executive summary. Very genius. So when I showed this to the lady who's going to have a tremendous amount of power over this whole affair, Darlene Sinclair, she said, boy, if our clients only produced something like this. That was at Brown's West Side 2 weeks ago, right? At 4 o'clock in the afternoon. She said, this would be so cool. So there's so many tools out there. And I really encourage you to take a look at the website, which again, you'll have on your system because it's Mars. Look at that, Mars Penny, CC. And let's just go back to front to this. So these fine folks they've got videos, they've got a lot, they've invested a lot in providing entrepreneurial skills for people in the Toronto region. And I really like the materials, and we'll be using a lot of this material over that 3-night session that we'll be doing next Wednesday, if anyone enrolls in it. So I was given 20 minutes. How did I do? Now there was a camera guy around here. Stuart is a co-op student from the University of Lethbridge, so they were taking pictures of him in action. Right? I got to tell you, Stuart is a phenomenal co-op student. He's doing great work. You can see Darlene smiling. That's success, right? And just he's being thrown into a virus, and this guy has survived. He's done a wonderful job. Can we give a round of applause? Years ago, I was inspired by the knowledge and wisdom of another individual here too. And he's sitting there incognito with his coat on by the video equipment, and that's John Walker. And John has a very cool interest in neuroscience. And he's a technology buff, and he teaches Excel to the students at the University of Lethbridge. And he used to teach entrepreneurial courses. And he was very involved at the college. So he's been chatting with me, and good things, bad things, things that could be improved and stuff like that. He started work at 8 o'clock this morning, and it's now close to 9, right? I said, do you get overtime? He looked at me, which means no, right? And he's working hard on this. He deserves a round of applause, too. Did this make sense?
Yes.
Any questions? Who might come next Wednesday? Cool, because I don't want to prepare a program this weekend for nobody.
We're 2 of the 3 that are signed up.
Awesome. Yeah, you know who else signed up? Bill Halley.
Oh.
It'll be good.
It will be, right? Rosemary?
I was just wondering if there's anybody here who would consider carpooling to Tech Connect, because it's really hard to get out there on public transit, and I'd be happy to help pay for anybody's gas.
There you go. So if you could see Rosemary at the end, that would be fantastic because it is a lonely spot out there at nighttime. And if there's any drifting, it adds another dimension to the drive. Nice way to put it. Okay, thank you very much, everybody.
Awesome, thank you, Bruce. Bruce great. He always gives awesome presentations. He has great inside jokes. We're super grateful for him. So next we're actually going to have Darren Newberger. So did I pronounce your last name right?
How'd you say it?
Darren Newberger? Sure. Yeah, okay. So just to introduce Darren a little bit, he's the president of Red Jolt, is a coaching and motivation business. He goes across the U.S., he talks to football teams, CEOs, companies, and motivates them to action. He's a pretty amazing guy. This pitch is going to help you to get the money that you need for your business. And if you're a finalist in the CEC, you're going to do a Dragon's Den style pitch session to a panel of judges. So pay attention to what he says. He's got some really good stuff for you. So I'll pass it off to him.
Thank you, Stuart. So just so you know, oh my goodness, what's happening? All my stuff, my PowerPoint stuff, is the same as my business cards. It's all about branding. So I was told I have to do a pitch presentation. Anybody here sport fans? Baseball fans? Excellent, because you're gonna like this one. It's gonna make sense for business as well, but right now I'm gonna show you, because I thought, well, pitch. I'm gonna show you what happens when a guy throws a pitch to Giancarlo Stanton. Who knows who he is? Nobody. Okay, so Giancarlo Stanton hits home runs out of stadiums. Seriously, you'll see it right here. He is the most dominant power hitter in baseball today, and just this past year, he got signed by my New York Yankees. So good things gonna happen for the Yankees this year.
He's known as the problem.
Oh, he'll figure it out. There's a malfunction at the junction. Okay, watch this. After we skip the ad. No. This is the Dodger Stadium. Here comes the pitch. Uh-oh. Uh-oh. Out of the stadium. So in measurements, that's about 400 and going to left field, about 435 feet. So how many football fields is that? That's amazing for one thing. So that's not the pitch we're going to talk about though, but it does say in here that is the problem. Sorry? Okay, so the problem. I'm going to go back to the problem at the very end of this presentation because there's a solution. And if you're a baseball fan, you'll figure out, you might think you might know what the solution is. But I'm going to probably fool you on that one, actually. We're going to just keep watching this the whole time. It's great. Okay. This thing is touching. Okay, 4 important factors to a pitch. The very first thing you can do for a pitch is practice, and then practice, and then go back and practice some more. And when you think you're done, go back and practice some more. Because you have to know your business. You have to know the inside of your business. You have to know your business plan. They're going to ask you questions, and if you can't answer those questions, they're not going to take you very seriously. So go back there. If you're going to give say a presentation to a class or to your friends or do an MC at a wedding, are you going to go up there and just wing it? And how's that going to work for you?
It works well.
Does it? And you should be up here teaching this class then, because I tell you what, buddy, you should practice for sure. Because they want to. So if you're going to do that for money though, would you not practice it?
Yeah.
Okay. Because at this stage, this competition, What are you looking for? For some money, right? So that's the most important thing you do is practice it, learn, go watch episodes of Dragon's Den, watch episodes of Shark Tank, go see how the people that give pitch presentations make this thing work. Google pitch presentation. You'll get about 10,000 hits, and not one of those are bad things to watch because you're going to learn a lot of good examples and things you should do as to how you present to the judges here at the CEC. Second thing is pitch as you are. That means pitch is exactly how you are every day in your business, how you are when you talk to your friends, because a lot of people get up there and think, okay, I'm going to pitch for money, so I'm going to stop and become this person who's like, hi, my name is Stuart, and I like to do this, and I like to do that. And if you talk to your people at your work, you don't talk that way. So they want to see you as who you are for your own personality. And if you, I think I've watched about 47 episodes of Shark Tank over the past 2 weeks to get ready for this Dragon pitch. We have tomorrow at Tech Connect. And every judge, 9 times out of 10, will say, I like that person, before they say they like his business idea or her business idea. So if you're genuine to being who you are, they're going to buy you first. They're going to say, okay, tell me the stuff. Like, tell me what's going on here. But if you are an amazing individual, I'm just being totally cool with who you are, they're going to see that first. And they're going to want to hear more about what you have. Doesn't mean you shouldn't know anything about your business, but just be yourself. Be genuine. Does that make sense? Thirdly, keep your pitch short. I have the best business. Kenny Jost, he has lasers that he measures stuff with. So he could say in 5 hours about how cool that is. Then you're going to be lost in about 13 seconds. So keep your pitch short, but to the point. It's like the elevator pitch. Practice that. How many of you guys have an elevator pitch right now? And how does it roll off your tongue with no problem? Bruce, do you have one?
No.
You ever been on an elevator, Bruce?
Sorry.
Have you ever been on an elevator?
I have. That's
Okay,
the
cool.
elevator pitch. I know, I've heard that, but right now I'm just trying to think where you found the time to watch Dragon's Den 37 times.
Well, I don't sleep, so I have to do something anytime. But your elevator pitch, that's basically the essence of your business in very smart or very short words. When you practice that and you rehearse that and you own it and you know exactly how that is. I'll give you an example. My business, Red Jolt, I'm personal development. I work with people, and my elevator pitch is this. I help people let go of the things they can't change in life and put the focus on the things that they can. Boom, done. So when you practice your elevator pitch, and you have that opportunity to go on the elevator one day, you're like, okay, just you and someone else watching, like, oh, good, they're here. Because you know your pitch. You're waiting to say, come on, ask me. They're like, what do you do for a living? You're like, well, I'll tell you what I do. Blah. It's that easy. That's how it comes out that smooth. And the judges want to know that quick and to the point. They don't want you to give the whole thing. And plus, you don't want to sell the farm in the very first time. You want to have the opportunity to leave some great nuggets out of that. So when they ask you that question, you say, that's a great question, Stuart. And as a matter of fact, this is the answer to that question. So you actually, you're dangling a nugget or a carrot. And finally, present the present. It's not present the present, it's present the present and excite for the future. So in other words, talk about where you are at right now. Don't give them the whole story of what's going to happen 15 years down the road. Tell them where you're at. Be honest. They can see through things that aren't true, because if you give them your business plan and they see that, they're going to say, well, this is not actually jiving with what you put down on paper here. So tell them the truth. Say, you know what? Right now, my business is at this point, and don't sugarcoat that. Don't lie about it. Tell them the exact truth. But then say, but you know what, though? Because I have a team, I have this person, I have an accountant, I have this person, and I have Bruce Thurston, who never pays attention when I talk back there. I have Bruce Thurston as a business advisor, or so-and-so, and I'm seeing Darlene, a community future. Tell them you have these people on your team, because they want to hear that you have people, that you have people who can help you get to that next level, and you can excite them for the future. And plus, they want to see, you're going to make any money. Because that's why you're giving this pitch. You want the money, and you want to be able to grow and expand on what you have right now as your startup. Does that make sense as well? So to reiterate, practice. Practice, practice, practice. Don't stop practicing. Do it until you know it, like own it. Because when you practice, you'll gain more knowledge in your business. And you know what? Knowledge is king. And the more knowledge you have, the better you can present that to the people, the judges. The king gets trumped by the queen, who is Darlene, and she gets the money. So let this stuff roll off and just learn. You should know the inside of your business, like better than anybody else, because it's your business, first of all. But when they ask you questions, they're going to ask you some solid questions, and you can answer that without even thinking about it. That's pretty cool for them to say, this person, she's got it going on. They know what's happening with their business. And that generates more interest on them as to having you get through it to maybe, hopefully, be the winner of the pitch contest. Make sense? And then just be yourself. Don't be somebody who you are not. Like, you can't go up there and think you're Donald Trump. I don't really want to do that anyways, but you can't be like, you just be yourself. They see through all that stuff, right? And keep it short, people. It's like when you write a 50-page business plan. Don't do that. That's a lot of time and stuff. You're just repeating yourself. Keep it nice and short, to the point. Practice your elevator pitch, because you will have the opportunity on the elevator, and you know it, you own that pitch, and you're like, yeah, thank you for asking the question. And present what's happening now. And then have them dangle that carrot for what's going to happen in the future. So that's pretty basic for right now, but tomorrow at 11:30 at Tech Connect, we're doing a Dragon's Den pitch. People are actually going to audition for the Dragon's Den, and I have a more in-depth presentation on that. You're welcome to come. It's 11:30 to 1 tomorrow at Tech Connect. Is there food, Mika?
Yes, and please register. Don't just come. Register first so I know that we're going to food.
And is it free or is it free or is it $10?
Well, it is $10, but we have sponsored tickets. And as we just learned tonight, $10 you can write off in your business, right? It's training.
So anybody can anybody make that tomorrow, 11:30 to 1? So make sure you register online at Eventbrite, okay? And then, so finally, I'm going to go back to John Carlos Stanton, who I just totally love. I think he's the best baseball player hitter ever, well, okay, the past 4 years. Now, the problem is that major league teams, especially in the American League, their problem is that they need to get this guy out. If they have runners on base and, he's this big power guy, can hit anything out of the park, how do you get him out? What's the solution? The solution would be a pitcher, because a pitcher is the man in charge of putting the ball in play, hopefully get a strikeout, or just keeping the ball in play. So the solution in this case would be, it's not Clayton Kershaw, it's Rich Hill. And, how did you like it, Stuart? What do you think it's going to be? How do you think they're going to get him out? What's the most obvious one?
Walter Walker.
That's not getting him out, though. It's from on base. Good call.
But it's going to stop him from getting everybody else.
Yeah. Or how else? What's the most obvious solution to getting him out? What would be the coolest way to get him out? Beat him. Let's put him back on base, guys. Strikeout? Strikeout. Okay, so let's watch this then. This is Rich Hill throw to Stanton. There's runners on first and second. And the answer is the boring ground out. How exciting is that? Ground out? But the thing is, though, in your business, I mentioned that John Carlos Stanton is the problem. Major League teams want to figure out how to get this guy out. So he is problem number one. The solution is how do you get the guy out? What pitch are you going to use to get this guy out? So most are going to think, well, fastball, we're going to throw a fastball right by the guy and strike him out. That's the solution. But sometimes in business, the most obvious solution isn't the actual solution. In this case, it was the ground ball. Thank you. One more slide.
Awesome. Thank you, Derek. That was a fantastic presentation. Okay, so we are basically at the end of the CEC, folks. I'm just going to go back to my presentation here. Okay, so I'll invite Dr. Donnelly up here as well afterwards. So March 28th at 2 p.m. Remember the deadline. Super important. We want to see your business plans. We want to see you succeed. So please submit your business plans early. If there's an issue, we'll give you a call. So just submit it early. So once those business plans are submitted, April 20th, the finalists will be announced. So we will be in contact with the finalists, and we'll send you the information that you need for the finals that are on May 2nd. So we're developing it's some pitching criteria, so when you do your presentation to the judges, and we'll send that to you. So I just want to ask if there's any questions generally about the CEC at all.
Just about on the business plan, what you said earlier, that it's gotta be in that specific order, font, all of that, is that required?
So it just makes it easy for the screeners, so I mean, you're
Yes.
gonna see, if they see a lot of business plans, it's easier to screen based on input rather than getting them looking for things that are on sequence, right? So.
Yeah, it is tough. I agree.
Well, tough that it's
Yeah.
redoing work.
Yeah, it's tough. It is for screeners though, and we know you guys can do it. Anything else? Any other questions? Okay. Charlie,